Hello and welcome to the Accendo Traders Group. This is our weekend wrap-up trading plan for June 12th, 2010. Our website is blog.accendotraders.com, where we put together effective video technical analysis trading plans on a daily basis. Accendo Traders believe in the importance of a trading plan. It's what separates the newbie from the pros, the consistent traders to the wishy-washy up and down traders. And we think there are four important components to any trading plan. We are on a shorter time frame because we are more of a day trading. We are more into futures. So first we want to identify what is the trend, what is the direction of the market at that current time, and then we want to identify some locations. What is going to be some good points to get into a trade or get out of a trade? Then we need a trigger. What are we going to use to say get in? What are we going to use to say to get out? And finally, once we are in, how are we going to manage that trade? So our four components are direction, location, triggers, and management. The week that was, well, we had all of our three major indexes up for the week, and cutting into how much we're down for the year. Of course, that's interesting because, of course, we were up for the year and then we went down for the year, so maybe we're seeing a little bounce here. The good news is that the stock market had the biggest weekly gain since March. The S&P and the Dow, biggest gain since March. The S&P was up, I believe, 2.5% for the week. All of our major sectors, 10 out of 10 of them rose for the week, led by energy and basic materials. And so, all of this basically happened on Thursday and Friday. We did start off a little sluggish to the week. As far as our overseas news, we had Chinese exports surge 48%, which also means that our U.S. imports probably went down a little bit. That good for them, bad for us. Australia's unemployment fell to 5.2%. Wouldn't we love to get back down there? As you remember from last week, we were at 9.7%. And although the euro dropped to a 4-year low, it did end up at up for the week at 1.1% for the week at 1.210. So we had a little economic news overseas. We had a little economic news here. Thursday's jobless claims was kind of uneventful. Retail sales at the open on Friday dropped 1.2% instead of an increase, so the market did start off the day low, and then later on the day, Friday, we had Michigan sentiment, as far as the consumer was concerned, rise to 74.5, which is above the 73 they're expecting. Bernanke testified expecting to see high unemployment to remain for a while. Remember, we have FOMC in a couple of weeks, but nothing really big on the economic data front. Apple, on the corporate side, their WWDC was on Monday. They unveiled iOS 4, but even as they had some wireless problems during their presentation, I think everybody was waiting for some type of rising news. And, I honestly really believe that's why the market didn't do that great on Monday after they ended it and there was no Verizon. E3 2010 starts on Monday, so we'll see what Microsoft and Sony last year unveiled the PlayStation Move, which is their Wii wannabe, and Project NATO is supposed to be unveiled this week under its new name, which is their Microsoft Xbox's answer for the Wii motion controller. So should be interesting. This week we don't really have a lot going on. Next week we do have FOMC, but this week we don't really have a lot going on, so that really leaves us to the sentiment of the traders. What's going on with the euro, what's going on with the dollar may drive the market for this week, and whether or not this is just a retracement back to the moving averages. We'll take that look at that when we get to the charts. But coming on Monday, we don't have anything. No economic data, no real important earnings. This upcoming week we do have Best Buy and FedEx, but that's stretching it. And we do have a couple more split plays to take a look at. Just want to go ahead and take a moment to remind you guys that the Accendo Trader 30-Day Challenge will be beginning on July 1st, 2010. Again, beginning of July, we will start our Accendo Traders 30-Day Challenge. And those of you who have participated before know that it's just a month-long series, educational series on getting people up and going and trading. A video will be posted each night. We want to get the feedback, people posing questions and helping each other move along as attempting to become better traders. But this 30-day challenge, compared to the ones in the past, will have a futures slant to it, learning how to get started trading futures. So again, July 1st, our first video will pop out there. Accendo Traders 30-Day Challenge. Watch the video, post your questions. Let's start a community. And then each Saturday in July, we will have a free webinar where we'll come together as a group and answer any questions as a large group also. So again, Accendo Traders 30-Day Challenge, July 1st, 2010. Okay, we are looking at the S&P 500 on a daily chart. And what's important here is that for our YouTube folks, we are just going to cover the S&P 500. If you subscribe to our podcast by going to accendotraders.com/subscribe podcast.html, we will talk about the Dow and the NASDAQ as a part of that. But due to our time constraints, we're just going to talk about the S&P 500. So the first thing I want to do is go ahead and draw a trend line. We're going to do Linapalooza. So I'm going to take the highs here and draw it out, and you can see that it matches up with the 50 moving average. If I were to draw a secondary trend line, taking these highs here and matching them up with the action that we just had, it brings us to the 20 moving average and the resistance of right where we're at. So we have some potential breakout potential here. Now, we talked about last week of a channel that we've been kind of hovering at. We'll use 10,040 as the low. I've also been talking about 10,050. You know, anywhere in there is going to be fine. 10,040, 10,050 is the bottom of this consolidation pattern. Now, the top of the pattern is up here at 1105, 1107. Going to draw that. Now, here's where we have a little bit of poetic justice here. Oh, didn't draw. Let's do it one more time. What you can see is that in order to play our traditional W pattern, we push down, made a low, come back up, push down low, now we come back up. The top of our consolidation pattern of this W pattern is up here. But our secondary trend line and our 20 moving average are a little bit below it. So we have sort of an early breakout signal. If we can break above into the 1100s, we can run up and test the 50 moving average. But keep in mind, we still do have this resistance of the top of our channel at the 1105 level. And it's possible, depending on how fast we get up there, that by the time we get up to 1105, the 50 moving average and our primary trend line down will be there. You know, it all depends on how these channels, as the chart moves over to the right. So we're going to look at that. A breakout of our W pattern and the 20 moving average is at this 1100 range. The top of our consolidation pattern is at our 1105 range, and we would love to see us get up here and test the 50 moving average. Our indicators are bullish. RSI heading up. MACD crossed over on Thursday, and our histogram turned positive. On Thursday also, our stochastics gave us a buy signal. Not our, not our nice green buy signal, but it is a buy signal, and we are heading up. We're going to take a look at the daily charts, and you can see how great these lines kind of look on the daily chart. But also notice that with our push down, there's a pull, and we're potentially forming the flag. We're potentially forming a bear flag pattern, which is bearish, and our retracement is going to be for the next push lower. That's something else to watch. Switching down to the hourly charts, you can see now the lines, Linapalooza makes a little bit more sense. Our base, our resistance that we were talking about, and our distance from there. Now, the only thing that our hourly charts are going to show us is that, again, our Thursdays where our hourly charts went bullish. Thursdays when we got a green arrow. But what we can see now is that we are heading back up to the oversold level on the hourly. So you have to be a little concerned about that. And that might happen if we get back up to this resistance level of 1100. Now, going to the monthly chart, we can see that we're back below the 50 moving average. The 50 moving average is sitting at 1150, and that's where ultimately we would like to get back above for the bulls to get that psychological boost. But here you can see we have a potential rolling over. Stochastics already rolled over. MACD has a hint of rolling over, and RSI has already rolled over, but it leveled out a little bit. So our indicators on the monthly chart are a little bit bearish. All right, our Accendo Trading Partners, we got a great futures trading room for you. Over 88% success rate on the calls using 3 to 6 contracts. You can see the track record for this past week. I am in this room. I highly recommend this room. Of course, I can't guarantee you results. You have to trade at your own risk. Futures is not suitable for everyone. But this is a great futures room, and I highly recommend it. And if you're trading futures, that's just 3 to 6 contracts to get this track record. We got a great broker for you also. Why? Because they have intraday e-mini margins as low as $300, and you get 20 free contracts if you sign up through us. Great charting platform for you, and we do have a turnkey trading system for you for futures. We're updating it, so I highly recommend that. Also, remember, YouTube folks, download our podcast to get our full 20-minute videos. 30-day challenge starting July 1st. And if you love our videos, consider donating to us to keep them free. As always, trade your own risk. Futures does not guarantee everybody, and you can lose all of your money.